we've learned a lot from the past, and in the present, there's two factors that are really driving closed-end fund analysis and the way people look at closed-end funds: the internet and income.
In case there's any doubt, the information age has arrived, big time in the closed-end fund world. Analyst Cecilia Gondor has been in the business for 30 years. She says easy online access to data and a persistent quest for income are reshaping the industry, as well as attracting new types of closed-end fund investors.
So we have a very robust, free source of information on the internet, and there's a lot of different resources. CEF Connect is one of the best, obviously, and it's a very well-respected resource. But then you also have blogs and chat rooms, and some of this is not always, first of all, a lot of it's not edited, so not all of it's completely accurate. So you have a lot of different sources of information, and it's up to the investor in most cases to sort through and see what's relevant to him or her. Then you have this focus on income. As new funds were launched in the year 2000s especially, the focus was on income and bringing to market funds that harness leverage to be able to boost income to the common shareholders. This has made them very popular as an income investment. So those two factors override a lot of the considerations when you look at closed-end funds. And what's merged and what really has dominated investment in closed-end funds today are products that are structured products of closed-end funds to help the investor muddle through that wide variety of offerings. Perhaps the most successful are unit investment trusts. These are fixed portfolios. A lot of them focus on different sectors of the closed-end fund industry. And when we looked at this in 2005, there were no declared stakes by UIT sponsors in closed-end funds. When we looked at it in December of 2013, $14 billion was invested by UITs in closed-end funds, and that's only the stakes that are above 5%. We estimate about 10% of the industry is held by UIT sponsors now. And then you have a wide variety of funds that are, for example, open-end funds of closed-end funds, closed-end funds of closed-end funds. We're even seeing ETFs and ETNs of closed-end funds. So this has been a dominant force right now in the industry. There's been a real change in the type of investor that looks at closed-end funds. In the past, it was the long-term retail investor. Right now, you have a couple of different groups that are dominating. You still have those retail investors. They're not necessarily buy and hold anymore. They're trading. Those are the do-it-yourselfers. Then you have a group of investment advisors that are focusing on closed-end funds. I think our firm was the first, Thomas J. Herzfeld Advisors, but now you have many, many more. Then you have the non-traditional investors in closed-end funds. Discounts have been very wide now since last summer, and some hedge funds and investment advisors who don't traditionally look at closed-end funds are focusing on the industry and buying because the discounts are attractive. So the wide availability of data on the internet and this focus on income have really changed the type of investor that looks at closed-end funds today. And some of those influences are going to be important in what shapes the future of closed-end funds.
Cecilia Gondor talking about the current closed-end fund landscape. In a follow-up report, she'll focus on the future. For more information and data on closed-end funds, visit our sponsor, CEFconnect.com, the authority on closed-end funds. Thanks for watching. This is Closed-End Fund News.